Okay, awesome. So obviously, what brought us together was this NAR settlement discussion. And I want to lead off with Taylor. Taylor is the lead counsel for Fairway Mortgage. He oversees all legal matters. If you just joined us, he said that he's been on these NAR calls nonstop. So I thought it would be a good guest for us to have on for our network and all of our agent partners to have him explain what's going on, maybe give us his opinion from a lender perspective. And then lastly, be able to answer any questions that you have. And if he can't, then we'll get them answered for you. I'll take a log of them all and we'll make sure we reach back out to you. So Taylor, why don't you kind of kick us off with, your overall thoughts of this NAR lawsuit from a lender perspective, and let's get it rolling.
Yeah. So, just to repeat a little bit of what Brian said, I'm one of the attorneys here at Fairway. It's great to be here, at least virtually, with everybody today. And like he referenced, NAR's been on our mind, as I'm sure it's been on all of your minds. This has probably been by far the #1 topic that I've talked to people about over the last, 2 weeks at this point. Both, people within the real estate industry and, quite frankly, a lot of people outside of the real estate industry, which just shows how big of a deal this is, right? I mean, I remember seeing news sites that you would never think would report on something like this, reporting on this. I think just because they were trying to get some clickbaits, honestly, with some of the titles they had out there. So, Brian, if you're okay, maybe I do a really, really quick overview of the suit itself. Even though I suspect that pretty much everybody on this call by now knows just as much about the suit itself as I do, right? Are you okay if I do that real quick?
Yeah, I think that that's a great intro. Just some brief overview of the suit, and then that'll let us lead into our topics.
Yeah, so just to get us all kind of on the same page, and I'm going to leave out a lot of details here. I'm just going to focus on the main change, at least from my perspective, and really what this suit was about was, buyer's commissions, right? The kind of impetus for this lawsuit, whether directly said or not, was that the plaintiffs accused NAR and agents in general of forcing sellers to pay buyer's agent commissions. I think everybody on this call knows that that's not true and that's not how it worked, and that forever people have always been able to negotiate commissions. But the plaintiffs, they apparently made a convincing enough argument that now, at least on the MLS, you're no longer allowed to put on, offers of compensation, right? That's really, in my opinion, what the big change is here, right? That doesn't mean that you still can't have agreements and get paid exactly how everybody's used to everybody getting paid. You just no longer can put it up on MLS, right? That to me, Brian, is the real quick and dirty big change from this suit. Now there's other changes, other details. That's the one that I think everybody should focus on, quite frankly.
Yeah, so basically when you're going to show a property, you don't know what you're going to get paid. It has to be discussed.
Has to
be
discussed.
That's literally the one-liner.
Yes.
So let's see if I can get this thing to work. So one thing I wanted to bring up surrounding that is that the state of Washington in the fall of 2022, they passed a very similar law already. So the state of Washington has literally been operating under this way of not being able to post the commissions on the MLS for, I don't know, what, a year and a half now?
Yeah, 18 months.
Is that correct?
Yeah.
18 months. So the reason I wanted to bring that up is because, there's a lot of fear, and I've talked to a lot of agents and I've been to a bunch of events, and there's a lot of fear in the marketplace of like, I don't know what I'm going to do, and I'm sure that there's going to be discount agents or brokers that come in that will manage a transaction. And that's always been the case. You've always had discount realtors in the marketplace. But the real statistic that really like caught me off guard was that 97% of the buyer's agents in Washington state from October 22 to date have been paid 2% commission or more since that law was rolled out. Mm-hmm. So there has not been a big change to anybody's compensation. And they have a lot of data to support it. Anything else you wanted to share on that, Taylor?
No, and I kind of want to reaffirm this is a real stat, right? And I've been watching Washington very closely because they kind of saw the writing on the wall for this coming, and they wanted to kind of get ahead of it. So they've been operating as though this NAR suit and the other kind of copycat suits have been over for a while. And this was a big change in Washington. Their standard real estate contract form that they all use. I think they did a really good job of updating it. And really what it does is outline different ways that a buyer's agent can be compensated. And it makes it very clear that, hey, this is the kind of thing that needs to get discussed up front. And they had the exact same worries that pretty much everybody else has now 18 months ago. And what they found is at the end of the day, it mostly stayed the same. And I suspect that the agents that are up front with their buyers and with the seller and seller listing agent and really discuss up front, you'll find that not too much changes. That's just my personal opinion, Brian, on that.
Yeah, I totally agree. The one thing though that that does worry me a little bit about this statistic, just in all honesty, is that the media has picked this up and really, made realtors look bad in the light of national media, whereas maybe that didn't happen in Washington. So perhaps we might have a little bit more pushback around the country than, this 97% number. But it is a great statistic to show that people do need representation when they're buying and selling a home, and agents are still being compensated in the state of Washington very similar.
Yeah, it's good to remember that purchasing a house for the vast majority of people, that's the biggest transaction they're ever going to make. They need hand-holding. They want hand-holding. The services that you all provide are incredibly valuable. And when people go through that home buying process, it becomes apparent to them pretty quickly that they're glad that you're there, right?
Yep. So wanted to talk a little bit about agents' pay. I mean, Taylor already said this. The bottom line is that agents can still be paid the exact same way. So Taylor, let me ask you a question. Like, a seller can technically still pay a buyer's broker, correct?
Yep.
And it can
Correct.
be on the seller side of the closing disclosure in the Alta. It doesn't have to be paid through a credit, correct?
Correct, right. And, this question comes up every once in a while is, hey, will that be considered an interested party contribution? No, it won't. It's the same as it's always been. That's a, customary fee that is paid. So it doesn't factor into ICPs either.
Perfect. And then we're going to talk about the interested party contribution, seller credits here in a little bit. But the point I'm making is that if you are writing your contracts the right way, then it's not going to fall into this interested party contribution guideline that we have to adhere to. It's just a matter of making sure that it's written out the right way. And I'm not an attorney. I can't tell you how, but the example that I can give you that I work with all the time personally is when a property needs a new roof, right? Roofs can be expensive, and a roof, a lot of the times we won't have enough seller credit to be able to credit the buyer for the cost of the roof. But what we can do is if the buyer picks a roofing contract and the seller pays for that out of their proceeds as a line item, then at closing, then it doesn't have to count into the seller credits because the seller is simply paying a contractor. So it's the same thing. The seller's paying you as a contractor to represent the buyer. Nothing changes at all. Compensation, again, will no longer be able to be listed on the MLS as of July of this year. And simply put, compensation is going to be negotiated through between the buyer and the seller's agent on every transaction, just one extra step. Anything else you wanted to add here, Taylor?
No, I think that's short and sweet.
Perfect. I'm just going through these questions to see if anything's.
Yeah, we're getting some good questions.
Yeah. Do you want to go through some of these questions real quick?
Yeah,
and we can pick them back up.
Yeah, happy to. Should we just how about we start from the top? I think you actually mentioned that you might want to answer Maggie's question there.
Yeah. Well, Maggie asked, will the lender have to go over the buyer agent agreement and the commission agreed upon before a letter of approval is issued? I'm going to touch on that a little bit in a slide regarding first-time home buyers, but I think that the main point is if the seller's not going to be paying for the buyer's commission, does the buyer have sufficient funds to pay your commission as the buyer's agent, right? So it's going to be about a transparent conversation between the buyer's broker agreement, and then us as the lender to make sure that everybody is getting paid properly and can actually close on a property. And I'll touch on that a little bit more. This next question, will lenders change underwriting to roll a buyer's agent commission into the loan amount? Hold on one second. Let me do something here. Is Fairway going to come out with a product that we can roll in commission to the back of the loan? This is this question that I've gotten from hundreds of real estate professionals. Are we going to make a product that allows us to roll the commission in the loan, Taylor?
Yeah, so this is what I would say. If Fannie and Freddie would let us, we will. Now, the real question is, are Fannie and Freddie are they going to change guidelines to allow for it? You guys aren't going to like my answer. I don't think they will, but you never know. And the one kind of hope that I have, at least in the back of my mind, is, out of all the lobbying groups, the real estate agent lobby might be the most powerful lobby in the country. So if anyone was going to get them to change it, it's them. But Fannie and Freddie, without a lot of pressure from a lot of folks, I highly, highly doubt generally that they're going to allow some new product like that. Now, that being said, Brian, there are ways to kind of get the commission within the loan, but then you get into the contribution limits and stuff, right?
Yeah, and we're going to touch on those limits and also another thought process or just a mindset shift that I have thought about in this discussion. But the point is that we cannot control and create a product out of thin air. We have to follow the government-sponsored entities, Fannie, Freddie, FHA, VA, USDA. Every single jumbo investor, they're going to have a different rule on this. And we don't think that they're going to allow us to tack on, commission to the back of any consumer's loan. Hopefully that answers your question. In Washington, do agents do the same as Florida where they complete transactions, or are they like New York agents where they only show properties? They complete transactions, Michael. I have a lot of really close friends in Washington State here at Fairway, and it's very similar to our market, very competitive. Anything on that, Taylor?
No, and I agree. What you just said is correct.
Okay. The only real question to explore is, can a buyer finance their own age agreed commission? Most buyers can barely come up with down payment closing costs. Hal, I'm going to hit that in a bit. We can talk a little bit through that. Does the commission get broken down on the contract, or is there another document that does that? What would title like to see? Taylor, your thoughts?
Yeah, so generally in this, the way they do it in Washington, and I suspect other states will follow suit. I have a feeling, Brian, just so that everybody knows on this call, that Florida, every state is probably going to update their agreement, their standard real estate agreements they have, right? And you'll definitely start seeing buyer's agent agreements if that's not already a thing within Florida. In that buyer's agent agreement, generally that's where the commission is broken down.
Yep. I think we'll see it on contracts. I think we'll see all the contracts across the country as well, a change. There's something here from George. Just wanted to clarify, this is a proposed settlement agreement that may or may not be approved by court. We can still see changes to the settlement agreement or a rejection by the court. Yeah. I don't have anything on that, but Taylor, if you want to share.
I have already failed as a lawyer. What I almost always say at the beginning of calls like this that I do is that this is all very fluid. Right? So take everything that I'm saying, everything Brian's saying, everything you're reading with a little bit of a grain of salt, right? Because the legal world is incredibly slow. Things take forever to actually be finished. This, settlement itself doesn't even go into effect until July. And the assumption is that, hey, the court will approve it, but you never know. A court could say, never mind, I don't like this. I do think it makes a lot of sense to assume that this will get approved, just FYI. But a lot of what we're talking about could change. So keep that in mind.
Yeah. And I think it's just good to be prepared, to know what you need to do if it does change versus kind of reacting when it does. So that's the point of us doing this call, and we appreciate you joining us, George. Let's see. A contract is between buyer and seller. Commission cannot be on the contract, at least for now. Okay. I think that's state to state for sure. Let's see. That was answered. What about VA? I have a whole slide on VA. All right, I'm going to stop here at Arlene Silvers, and then let's roll through some of these slides, and then we can answer the rest of the questions towards the end. Sound good?
Let's do it.
Okay. So one thing that came up is like, can we finance the reason this slide's next is is Fairway going to come up with a product that you can roll the commission into the buyer's loan? Well, in some cases it's possible, but you're going to have to do it through current guidelines through a loan to value reduction, right? And loan to value simply means what is the buyer putting down divided by 100. So if someone's putting 3% down and they're a first time buyer, the loan to value is 97%, 95 for a non-first time buyer with a conventional loan, 96.5, 100 for VA and USDA. So really, the only way that you'd be able to finance in the current guidelines is if, let's just use an example, a buyer's putting 10% down, right? If we did a loan to value reduction where they're putting 5% down instead of 10% down, and then they paid your commission as an increase in closing costs, you could think of it as if they're rolling it into their loan because they're putting less money down and they're just paying you out of pocket. So in that case, if they're putting their closing costs into the loan, really they're putting 8% down to pay you your 3% commission. Couple caveats here. When you do a loan to value reduction, it is going to adversely affect the cost of mortgage insurance. The cost for mortgage insurance is going to be more expensive when you put 5% down versus 10% down. Also, potentially Darlene's probably screaming at me right now. I didn't put the E at the end of rate. She's like the police for me. I moved too fast. The rate could get affected too, is my point. Like if you're putting less money down in certain cases, it could adversely affect your interest rate as well. So this is the only way in current guidelines that you're going to be able to roll the commission into a loan. Does that make sense? So I think there's two classes of buyers that are really going to get adversely affected with this if commissions get become a really big negotiation point and sellers don't want to pay buyers commissions. And the first one's going to be the first time buyers. And that's what I was talking about a little bit earlier, was being transparent. Transparency is so key. We as lenders, we have to know how much cash they have to work with in order to put this all together. If they're scraping by and they can't come up with their down payment and their closing costs already, where are we going to come up with the funds for them to pay you as their realtor? So some ways that we can help as a lender are, number one, the loan to value reductions, right? If they plan to put 5% down, maybe they're a first time buyer, we have them put 3% down. But we can also look at first time buyer programs. For example, Fairway has a really neat program called the Community Access Loan. Many first time buyers are eligible for this. It's based off of where they currently live, and there's no income limit. So if they qualify for that grant, true grant, never needs to be paid back, the buyer's going to get $7,000 towards their closing costs, which is a huge pickup if they need to pay a commission. There's other down payment assistance programs as well. We should be getting Hometown Heroes back in the state of Florida. That will help with this problem. And there's other incentives as well, such as the Florida Assist and et cetera, et cetera. So we can help in that manner for first-time home buyers. I don't know if that makes sense, but that's really all we have to work with currently in the current market. I don't know if any of the other Fairway loan officers have anything to share on that. Anything from you, Taylor, on that?
No, just, to me, your first line here, the transparency is going to be key. That is going to be key. That if you have a first-time home buyer who has just enough cash for a down payment, I would highly recommend that buyer's agent, borrower, and the loan officer all talk to each other about the different options that are available when they're going out to look at houses.
Yeah, agreed. The next thing that you can use as a tool is really the seller credits, or building the commission into the appraised value. Personally, Taylor, I don't know if you agree with me here, but I think that commissions are already built into the current appraisal value market as it stands, right? So if I'm selling a house and I'm paying 6%, to the agents, that's already built into the sales price right now, right?
Yeah, I think it's what in my, this is, my opinion, right? It may not be an
Mhm.
officially listed item that's on the appraisal, right? But it is from a practical perspective, it is built in.
Yeah. So I think in many cases, like we have to do for many first time buyers, is increase purchase prices and hope that the appraisal comes back, right?
Yeah.
Hopefully
Yep.
the appraisal comes back over or comes back at value. Um, and and we can, offer, the seller can offer that seller credit.
Yeah, and this is, I just want to point out a real life example. We had one in, I think it was Wisconsin last week, where buyer went back to the seller and basically said, "Hey, can I add an extra $5,000 on top of the sales price to do what we're talking about here?" Right, and that praise no problem. So this is already happening, I guess, is my point, right?
Yeah, this happens all the time, especially when people need it for closing costs.
Mhm.
Um, just another, fun guideline. If, let's say, your appraisal comes in over, and let's say, your purchase price is 600,000 and your appraised value comes in at 605. In the middle of the transaction, you can increase that purchase price in most cases and then ask for that $5,000 back. So you can do it after the appraisal comes back as well. So that's something to keep in mind if you ever need closing costs or this comes up as a problem in the future. It doesn't always have to be right then and there at signing the contract. So I already asked you this, Taylor, but let's just reiterate it. Can't the contract be negotiated that the seller agrees to pay the buyer's broker, and and this would be a seller side cost on the final closing disclosure, and no concern to the seller and interested party contributions?
Correct across the board, right? And this, again, I know we're repeating ourselves. This is what we saw happen in Washington, right? Is that instead of the standard kind of offer being on MLS, it just moved to the contract. And most people went on like nothing ever changed with it.
Perfect. So this is a cool chart that we have. If anybody would like a copy of it, we can email it out. Get with your Fairway loan officer and shoot them a text, email, call. And we have a PDF and also an image of this where it goes over the max seller contributions for different loan types. So as you can see, conventional, less than 10%, 10 to 25, more than 25% down, the seller contribution on the right-hand side increases. The one that you have to be very careful with is the VA loans, because we'll touch on that later, but veterans cannot pay an agent commission. So we'll email that up if anybody would like a copy of this. Okay, so VA loans. Veteran buyers cannot pay a buyer's commission. Bottom line. So if you have a VA buyer or a veteran buyer using a VA loan, you have to write in the contract that the fee, your fee as a buyer's agent to them, needs to be paid by the seller. Or if you want to try to get paid through a lender credit, we can increase the buyer's interest rate and give them a lender credit in order to get you paid. I don't know if the veteran's going to be okay with that, but that's the only way to get the credit. The thought process is just make sure you're writing the language right when all this happens, to have the seller pay your broker upfront. We are pressing, and the Mortgage Bankers Association is pressing the VA to make a change. So there's a lot of lobbying going on. But Taylor, what do you think the likelihood that the VA is going to change the rule on that?
So this is one, and sorry if I rant a little bit here, because this is such a dumb rule for VA, for veterans. This hurts veterans a lot, and especially under this new regime change for as far as the settlement goes. I actually do think VA will change their rule on this, right? We have a lot of very good contacts over at the VA. I have friends personally from law school that work over there, and I told them in no uncertain terms that they are idiotic for not allowing this, especially now, right? This will only hurt veterans. And if the whole point of a veteran having access to a VA loan is to help them, they have to change this rule. So unlike my negative Fannie Freddie guideline change comment before, I'm actually very I do think they will change this. Now, whether that means they change it in a month or in a year, I have no idea, right? But I do think that this rule will change.
Well, I like the optimism.
Yeah.
That's great. But currently in the present market, it's not allowed. Veterans cannot pay the buyer's commission. So just remember how you make your offer. And I think that if you have a veteran that's looking to buy, just make sure you consult with us up front so that we can tell you what's allowed or not allowed. And then you can get with your attorney on making sure that you have the right language in your contract. Cool. Let's see, what else do we have here? Conclusion, and then we'll go over the rest of the questions. I wanted to keep this brief within 30 minutes, so we're almost right there. So remember the seller credits and the interested party contributions. Remember talking to your buyers about loan to value reductions and the different first-time home buyers. Just know the big issue with the VA loans up front so you don't get caught into a situation. And just know that this is fluid and it's going to change. And when and if the government-sponsored entities, Fannie, Freddie, FHA, VA, if they come out and give press release of what they're going to do to make changes, we'll hold another webinar to kind of go over all of that information to make sure that you're fully educated on those changes. But I think without further ado, we're going to just go ahead and finish up the questions. And then we appreciate your time. Cool. Taylor, anything else to add before we hit these questions?
No, let's do the FAQs here.
Okay, let's see. If the commission is in the loan, it affects the purchase price, how that affect appraisals. I think we touched on that a little bit, right? So I think it currently is already in the purchase price. You know, commissions are already kind of built in. So I think for appraised values to really be affected by any change, it's going to take time because appraisals just don't go down overnight, right? So it takes history in order for values to decrease. Anything on that, Taylor?
No, I agree. And I think kind of what we mentioned before, that from a practical perspective, they probably already are in those appraisals.
Liz asked, does buyer's commission have to be public to seller side?
So, and Liz, jump in if I'm misunderstanding your question, but as long as if the buyer's commission is outlined between the agreement that is between the buyer and the buyer's agent, that's a private agreement. They don't have to share that. Now, I don't know if it'll show up on the sales contract. If it does, then, you know, obviously that the seller would see it, but generally, no, it doesn't have to be.
Well, this is my thinking, and because I've had long ago attorneys say, Liz, never put the commission on the contract because that's not between the right parties. So keep it out of the contract. And I know that the challenge sometimes, I've had agents, because we have been working with a buyer's agreement. We've for years now have had buyers pay commission as well if there's a shortage. Mm-hmm. And so sometimes there's a battle because realtors don't understand that we're not bound to pay an equal amount, number one, that we are, you know, so sometimes they get angry because they see that you're getting paid more. Yeah. And it's like, you know, I told you how much I was going to pay you. You were happy with that. Why are you angry now? Yeah. Right. So now I want to avoid this harming our fiduciaries, because an agent now feels like they're somehow being slighted if they believe that they're not getting paid the same as the other party.
Got it. Yeah, no, and I think so. What you just said is absolutely correct, right? But what is true is, hey, just using the buyer's agent agreement as an example, that agreement is between the buyer and the buyer's agent. It's not an agreement between seller and seller's agent. So it's private between those two individuals as long as they want it to be private. Right? Now, they can always share that if they want to, but they don't have to.
Yeah, I think the only place that it would have to show up, unless you know, Florida and the other people, there are some people from other states on here, unless they require the commissions to be laid out on the Florida as is contract and there's a change, I think that's going to be the only other thing. Only other place is that that final settlement statement or closing disclosure, commissions are on them, right? You know, so that's where it will come up at closing as well. So that's something that always has been the case. But at that point, I think people just want to trade keys, right? Next question is, do you see realtor boards creating a way to advise buyers agents that the seller is offering buyer side commission in other section of MLS or box with different verbiage with some sort of disclaimer? I think that's the whole point of this lawsuit, is that they want to get away from that, right, Taylor?
Yeah, I think at least for a long time, they're going to be incredibly conservative with just trying to do anything like this. Now, as time goes on, maybe they try and do some roundabout way with it, but I think that they are going to stay as far away from outlining anything like this on MLS as possible, especially because of just how much money that they're paying out on this.
Yeah. Hey, Taylor, I know that you said that you only had 30 minutes. Do you have a few more minutes, or you have to head out?
I told the other group that I'm going to be late and they're just going to have to deal with it. So I like hanging out.
Okay, thanks. Yeah, we have fun times at different meetings, right? What implications will the ruling have on the buyers using down payment assistance programs? Now, so Renee, I think this is a great question, because I wonder if the down payment assistance programs are going to say that you can't use these funds or this assistance towards certain aspects of your transaction. So right now, let me just use the Hometown Hero loan, for example. You're not supposed to use any of the Hometown Hero loan funds towards an appraisal shortfall. But usually there's enough closing costs and other down payment to cover it, so it doesn't come into play unless it's a VA loan. But I wonder if they're going to say, well, you can't use this towards real estate commission. We don't know yet, because every DPA or down payment assistance program is going to have their own rule on that. But if it's a true grant from like Fairway, the community access grant, we follow Fannie Mae guidelines, and it won't be a problem, because technically it's just commission's just a closing cost.
Right, but what also happens when the funds run out? Because a lot of these programs, they're not funded completely through the year. The funds may open up during the city or the municipality's fiscal period, and then they get a few applications, and then the next thing you know, the money's gone.
Yeah, so I mean, it's definitely difficult, because there's only a certain amount of funds that are allocated. The state of Florida, for, let's just use the Hometown Hero, for example, was only given $100 million in July. Those funds were gone in 45 days. There are what are called fallout funds. So every other week, the state of Florida was releasing fallout funds, and then it was first come, first served to reserve the funds for somebody in contract. It's a lot of communication with your buyer, but we can't control that. So it's a matter of really just having your buyer ready to buy. There is some, there's a little whisper on the wall that Hometown Hero is coming back in July with another $100 million. Not been guaranteed yet, but just keep that in mind.
Yeah, but I
so
don't
buyers,
see that. Sorry, go ahead.
If you want to have an offline conversation with me, I'd love to talk to you about it, because I think it would be a good conversation to have. But for the sake of time, I'd love to just move on to a different question, just because we only have Taylor for a few more minutes. So buyers use these grant monies towards a buyer's commission. Is that allowed? We just covered that one. The Fairway first time home buyer grant nationwide in certain markets. Why wouldn't appraisal ever come in over contract price? We see it all the time. We covered that one. If the buyers are obligated to pay SA commissions, values are going to go down. Sorry, this is a lot of commentary, Taylor. I'm trying to get.
No, you're fine.
Can the VA rule change to allow this? If not, veterans are screwed. Yeah, Hal, I think you're right. I think the veterans are going to be hurt worse than anybody else, any other buyer, because a seller's not going to accept their offer, period, because it's gonna cause more issues. And there's already enough negative connotation in the marketplace around veteran buyers, right?
Yep.
People think they're harder loans. They're actually the easiest loans that we do. They're so easy. Currently working with a VA and you close before July 1st, you have to change the way you are doing a closing.
No.
Taylor, any thoughts on that?
No, so right now, this is actually a really good point. Keep in mind that everything we're talking about now is basically pending for July. right? So right now, everything's should just be operating as business as usual, unless, you know, your state real estate board is already putting in new rules or anything like that. So take, you know, just make sure you're keeping up to date on whatever your particular state is doing. I haven't noticed any states put anything into effect yet, other than the ones that already did it, like Washington.
Yeah. Is it true commissions cannot be on our contracts right now? I believe that is the case for the Florida as-is contract, but I'm sure that there will be a change when and if the settlement goes into effect. Will there be a special form for buyers to sign or with the buyer's agent? I'm sure that, you know, many brokerages are going to require buyer agency agreements.
Yeah, and I'll jump in there. I think I think it'll be required.
Okay. Many people already use them. A lot of different states use them as well. The state of North Carolina, you have to have it done or you can't represent a buyer. Let's see. Excuse me. How do buyers request that the lender credit to pay commissions? Good question, Renee. It's going to be through a lender credit. So it's going to be called premium pricing. When you look at our interest rate sheet, anything over 100 generally gets credited back to the buyer. So it's going to mean higher interest rates for the buyer. Contract is signed by a buyer and seller, commission is not allowed, or more accurately, not enforceable. Okay, I think we went over everybody's questions. The rest of it was just commentary and statements, which we appreciate. Any last questions or thoughts, anyone? And then Taylor, last thoughts, we'll let you roll.
Yeah. If anyone has any questions, jump in. Don't be shy. I'm nice, I promise.
Unmute.
Man, I scared everybody, Brian.
Thank you both. This was amazing.
You're welcome. Well, thanks everybody for your time today. Hopefully you got a little bit out of it. And if anybody has any questions, feel free to email me directly or one of your Fairway loan officers, whoever invited you to this event, and we'll get them answered. If we don't know the answer, we'll ask Taylor, we'll ask Scott Fletcher, who runs all of underwriting for Fairway directly, and we'll try to just help in any way that we can. You know, lenders have gone through a big change in the way that we were paid with Dodd-Frank. It's been a little bit over 10 years since commission changes changed for lenders as well. So we've been through this. We've been through this in the last 2 years. We have seen what's called margin compression. We have cut our compensation drastically just to win business because of what's going on in the industry and the interest rate market. So we're currently going through it with you as well. So if anybody needs any tips, advice, anything, just please let us know. We're here to help. We side with you. We live and breathe off of our referral partnerships, and we appreciate it. And thank you for your time today.
Yeah, and thank you all for letting me talk to you. This is, trust me, most of my day is pretty boring. This is a lot more fun talking to people like this.
Let's do it again.
Yeah, Liz.
We'll do it again.
Yeah, we need to, you know, stay in touch, because I think that I mean, big shout out to Kim Viteri. She's our rock star here in Fort Lauderdale with Fairway, and we can't do what we do without you. And this is so important for us to kind of come together and have a plan to continue bringing amazing service to our buyers, also continue, you know, safeguarding that fiduciary with the sellers, and working together so that this makes sense and that, you know, we can continue, because like I always tell people, I know that realtors may not have the best reputation, but when you've been doing this for a long time and you're actually have a career in it, you know that these are the hardest working people on the planet, you know, because it's like we basically are working for free. And I think that this is going to bring an opportunity, guys. So please, everybody, put the hat on that. This is an opportunity for us to rewrite the way that we work in ways that we should have done decades ago. And so I want to invite everybody, and you guys, you lead the way for us to have these types of meetings again, to come up with ideas of even scripts, like how are we going to talk? What are we going to say to again, remain high on service and make sure that we ourselves are also excited about what's coming up and not running for the hills.
Yep, those are good points, and we'll definitely come up with some scripts and stuff that we can use. It's all about collaboration. You need us, we need you. We're a team. We just want to help families get into homes. Lots of opportunity. Thanks, everybody. Have an awesome day. Appreciate your time again, and thanks again, Taylor, for joining us.